I'm broadcasting on our free Simpler Trading platform, on my Chart Patterns Mastery Room, and in the YouTube. This is just a half-hour little session on candlesticks. And the thing is, I think that candlesticks get just overmushed. And what I mean by that is I don't look at every candlestick. My first priority is still chart patterns and support and resistance. If I can get the candlesticks to jive up with the same thing, well, that's great. But I really only look at three types of candles and candlesticks. And I like to throw in a little things that sort of add to the probability of success. So let me go into them. Well, I'm going to show you here. One of them is the doji, the indecision candle. One of them is this. Now, I know it's all red, and sorry about that. If you've got a red candle, big red candle, that's one of the caveats I'm going to talk about. And then you get a green take back half. That's called a piercing pattern. So that's where you do it, and then you stop yourself. I'll show you examples of them all. And then you have the dark cloud cover, which is the opposite of the piercing pattern. So the way I'm looking at it in here is this. I add the ATR trailing stop on multiple time frames. That's just readily available on Thinkorswim. And I just use, a lot of people use different iterations, but I use 9 and 2.9 and simple. You can put all these other ones and they come out about the same. The reason I do that is if something's in an uptrend, a bearish candlestick is going to work less as well. So all about probabilities, like I said. So let me show you some of them. Number one, I don't look at these. I know there's three marching soldiers and all that, but it's just too confusing. I look at big red candles, big green candles, and dojis, and that's it. So I'm sure other people are more experts, but that's what I use. So I want to show you some ways that you can use it intraday. So one of them is here. Here's the NASDAQ. We were showing this in the Chart Patterns Mastery Room. Oh, right here. And I'm going to clear the drawing set. There's a classic pattern right here of a red candle taking back half a green. Now, the problem is most people say, oh, it's a bearish engulfing. You short it down here. I don't agree because on a slow day, it's already made its move. I want to short it right here when it takes back half that green candle with a stop probably at that wick. So you're basically risking about 10 points. Guess what happened? Real quick, it went down 40 points. So the moral of the story is, where did it stop? It stopped at the first line of support. And that brings me to another thing. Dojis, bullish reversals, bearish reversals, you have to combine support and resistance. As you see right here, that's why things stopped. I'm really into support and resistance. All I'm taking is prior bottoms become more bottoms, and if they get under it, they become resistance. That's it. So no more, no less. So that's why I do it that way. Now you might say, well, how about here? Why did you get out? Well, I would have already been out at support. So I would have already been out. Now, then you had a doji here, and guess what? It took back half this candlestick. So it went back to resistance. Darn right, you could go back and reshort it. Now, keep in mind, this is a 15-minute chart. Usually we're using, when we're trading intraday, we'll have the 15 on the left. And we'll have like a 2-minute on the right. Makes it a lot easier to see these. On the left, this is 10:15. So on the right, that's right in here, 10:15. And as you see, if you say, wow, that was sort of fast, well, guess what? You got another chance. You got that chance. But if I'm going on a 15-minute, you see it a mile away. You could even do it here. Green candles, you take back half, that's where you pound it out. And like I said, it doesn't look like a lot, but that was actually a pretty big move. So you could look at the reversal wicks. I think those are a big deal too. But I usually see those on big green candles and big red candles at the end of it. So usually I see it like this, where I see a big wick and then I see a green candle take back half, green candle take back half a red. So that's the way I look at it. And it's worked pretty well. So I thought I would show you a lot of examples. So I like going over that. So, and I don't ever look at a strategy. Like I said, I try to make this as simple as possible over the last 40 years and just make it certain candles. I'm telling you, you go crazy looking at every little candle in here, every little candle. So I'm just taking the big ones, and that's the only time I use them. So I'm sure they work other times, but that's how I've just found it to be very successful. So let's go into Microsoft. And let's go into Microsoft here. And I want to show you some examples on a daily chart. So the thing is, there's a doji. It followed through. You're like, yeah, they're going to kill it because the key is the follow through. So on the piercing patterns and the dark cloud, definitely it's when it takes back half a candle. But when you get a doji, which is an indecision candle, it's much less likely to work on the downside if the stock is in an uptrend. It just usually has the sell-off truncated. On the other hand, right here, yeah, same thing. Follow through, got truncated. So it's very interesting. Did I miss it here? Yeah, maybe, because it's not perfect. So this would have been great, a much better short if it was under things. So let's go back to Microsoft. I'll show you some others. There. Now that's a big old red candle. Believe it or not, that's taking back half. Is it in an uptrend? Yeah. But when it has those type of wicks, I'll make an exception. So, and plus, if I shorted here and I'm wrong, you just stop yourself here. So just, keep that in mind. So also, this was a really choppy market. I don't know if I'd call that an uptrend. So it's very likely to work. Now, if you go way back, yeah, those are your downtrends. So you're under this 50, and I'll show you a great example of a doji in here. All right, so you have it like this. So I take that ATR trailing stop. Let me take that in here. And I get it back over here. And then you get this kind of rally. So it got over the ATR trailing stop over, but it's still choppy. Still choppy. So it looked to me like you wait for a real follow through. Did that whip you around? Yeah. But when it's choppy, usually they start working. If I had shorted in here, I would have gotten stopped here, and then I probably would have reshorted. So that's not perfect. Don't get me wrong. But I found that the dojis in a bear market work better. As you see with this, it was over everything. It wasn't perfect, but it ended up working. It worked a lot better with the NASDAQ and the ES charts, which I'll show you in a minute. But I use a lot the big ones, the big ones. Also, I'll look at that. So as you see, a doji, it's sort of a doji. It followed through under that ATR trailing stop and it got walloped. So I just try to increase my probability of success. So let me show you the ES. This was a good one last year. Now we go over all the time that if something hits resistance, it doesn't mean to short it. It means to look for a reversal candle. See this? Sure, you could say that's a doji, but it's over everything. I'm not going to trust a darn thing. Plus, you have the CPI coming out tomorrow. If I do anything, it's going to be ultra short term just during the day. That's it. So that doesn't show me a thing. So like I said, here's a follow through in an uptrend. I mean, that's definitely an uptrend, not a choppy thingy like here. So I'm not going to trust it on the downside. On the upside, it sort of worked, as long as you had to stop down in the support. That support combined with the doji is extremely important. So let's go back now and I'll show you what I'm talking about with weekly overbought and oversold. Here's the big wallop last year when the bond market got killed. So you see on how the market had these like waves, and every one of these got overbought, like you see right here. And a lot of people ask, well, how do you know it's overbought? Well, to me, it's all relative. So it got overbought. And then it's like, well, sure, it could get more overbought. And that's why you look for a reversal candle within it. So same with here. You might have gotten overbought here, but it kept going because you never had a reversal candlestick. So that's the way I look at it. Now, don't get me wrong. I'll look at a big old wick like this, no doubt about it. But I like to see it reclaim things on the way up, to be sure. Like here, big wick, sorry about that. And it took back half, and your stop was down here. Now, that's a weekly, gets a little rough. But I wanted to show you this so you get a perspective of that day. So that day, that week was March 28th of last year. Now, I went back to a lot. I didn't go to this one. So if I make a fool out of myself, sorry. There. So now you're overbought. We know you're overbought because of down here. You're not sure if it's going to get even more overbought. But the whole key is when it gets overbought, you're starting to look for a reversal candle or bull and bear flags for that matter. First, I look at trend lines, but I'm looking at that right there. Right there. Now, this one worked also on the downtrend when it got overbought. That was at the beginning of the year. But that was the break. This is the reaction. And as you see, these worked really well. All under the ATR trailing stop. So they were all in a downtrend. And then these are more likely to work. So usually what I do when I get it up near resistance, so I'm looking at multiple time frames. I see that it's overbought. I then look at a daily and look for a reversal, but then I'll go to even shorter term. Usually I'll use a 4-hour, and then over here I'll use an hourly. So let's go back in here to last year, if it goes far enough. I'm going to have to change this. Give me a second. I went 180 days. I'm going to go a lot. Because I think this is important for you to see if I could get it to go that far. But the point is, if you put in a 4-hour chart, it came out and you could see it a mile away. But the thing is that you were already leaning short because it was overbought on a weekly. So when you saw it overbought, then you're looking for your trigger to go short. So that's what we're talking about in here, and it worked great. So the weekly, the overall trend was down. Then it got overbought, and then you're looking for the reversal candle because who knows, maybe this is a new bull market. But to me, it was overbought on a weekly. I always go to the weekly, the daily, and I like to try to go to the 4-hour. Let's see if I can go all the way back. Yeah, there you go. So there's the 4-hour on the ES. Just to let you know, when I do stocks and indexes, I look for the candlesticks on daily or hourly. On 24-hour futures, I like to use the 4-hour. So right here, you knew it was overbought in this area. And on the left, I'm going to put the weekly chart so you could see the arrow. So right in that area, March 28th, because that's a weekly. So we're going in here. So you know it's overbought. You see the little indecision candle, and then you find the trigger within that indecision candle. It doesn't have to, and believe it or not, you got indecision in here. But all I'm doing is trying to find when you start seeing reversal signals. I know everybody in the Chart Patterns Mastery gets sick of me saying, yeah, it really looks overbought, but we got to look for the reversal signal. So that's your first signal here. And then the second is some kind of trend line you can draw. So you got that here, you got a little one here, but the biggie is that trend line. So I'm always trying to combine stuff. The more points of contact, the more reliable the trend line break. So you had the overbought on the weekly. So then I go to the 4-hour and you look and you're like, yeah, I'm going to start looking for reversal patterns because it's overbought. And then you got them shorter term. So did you maybe miss the first 50 points? Yeah, but look what happened. Yeah, you made 600 points at the minimum. That's what I'm telling you. It's just you got to look for the reversal pattern. So you don't just blindly go on, oh, it's too overbought or too oversold. So just keep that in mind in there. So the next thing, because I'm not on that long, how the heck do you scan for these? So, keep that in mind. Well, right now we're going over doji. So we'll go over that. And basically, it's all about overbought or oversold in a downtrend. And if I have time, I'll be happy to show you one. Sure. But let me first do this. And I want to show you just a simplistic scan. So this is a doji scan. All I'm doing in here is I'm doing this. So I have a lot of doji scans because I'm always trying to modify. But this is one I did. All optionable stocks. Now, a lot of times I just take my main list, and my main list is just most of the most active. So I took stocks between 30 and 2,000 because you get down lower price. Yeah, you're going to get a ton of dojis because they don't move. I did like 700,000 around noon. That's fine. And this is a point of contention. I mess it around all the time. Body factor 0.15 and the length 20 on a daily. And then you just scan. So let me share that with you. So here's a simple doji scan. So there's a simple doji scan. Let me put it in here. Like I said, when the MACD is over zero and the stock is under, or product is under its ATR trailing stop, then it's overbought in a downtrend. If it's oversold, it means it's oversold in an uptrend if it's over the ATR trailing stop. The point is, you don't know when overbought and oversold is going to stop. And that's why if it's oversold in uptrend, then you're looking for a reversal so it resumes its uptrend. So it could get where it gets way down. But it's really, if it's oversold under the zero line, then you're looking for your reversal pattern. So let me see if I could share that in the other room. There. Share it in all the rooms in there. So I'm excited about that it went. So all this is looking for dojis on a daily. So right now it came out to 40. So I'm just going to save it as a watch list and make it 40. Now, Neil, this goes with what you're saying. If you see dojis, you really want to combine it with if it's a doji in an uptrend or a downtrend. So you could do that too. So first, I'm going to do it just like this. I'm just going to take this and I'm going to go to 40. I just want to give you an example of what spits out. I like taking the most expensive for an example. So there's your Microsoft. I'm going to take it on a daily and an hourly. Like I said, equities or non-24-hour indexes, I like using a daily and an hourly. On futures, I like using a 4-hour and an hourly. So let's look. Yeah, there you go, Microsoft. So does that mean it's going down? No. Does the pattern look like it might finally break down? Sure. But you're going to see there are a ton of dojis today because of an event tomorrow. I've seen a million times, whether it's earnings, a drug approval, or now the CPI or the FOMC, but tomorrow's the CPI, you get a lot of indecision candles. That's the problem with this. Sure, that looks like it's going to break down if you look on the far right. On the other hand, if this breaks and then does this and forms a doji under resistance, yeah, and it's near the ATR trailing stop, I'd get a lot more bearish. Right now, I'm almost like picking a top. So just keep that in mind. That's the way I'm looking at it. So in there. And so that's how I'm looking at it. Like I said, I will show you. I wish I had more time. Like I have 8 million scans, but I'm going to show you a scan. You were asking about the MACD. Is that right, Neil? Yeah, well, I like to combine it with things because if I just do overbought or oversold, I might get myself hit because it's like this. It's a zero line that starts going under it, but it could go way under it. So I use it more like overbought in an uptrend, oversold in an uptrend. But what I'm going to do in here is modify this doji. And let's say you're looking for something that's forming a doji at resistance. So we're going to do it this way. We're going to change this. Now, I don't know if I have a doji with all of these thingies on it. I'll let you know if I do. But what I usually do is I just go and I take ATR trailing stop and I'll just combine them in the doji scan. There, the close is less than the ATR trailing stop. We'll start with those, even though there are hardly any that have that. So we're going to add that. I'm just going to go over here and I'm going to copy and paste it. And I'm not sure we have enough time for me to do this, but I'm going to try. So now we go back to doji scan. And so when I do that, I'll show you. Just a simple doji scan. But now what we're going to do is we're going to add something. We're going to add a study and just custom. There. Now you have the closes less than the ATR trailing stop. So now what you want, and the real power is if you could find it overbought in a downtrend and it has a doji. That would be a beautiful thing. So first thing, let me save this so I don't screw it up. I'm going to make this doji scan 1. All right, now what we're going to do is we're going to add what you asked, the MACD. So we are looking for stocks that are in a downtrend, have a doji, and are overbought. So let's add that. And let me move this over so I could see it. Now, this is just Think Script Editor, but I just want to share this when we get it built. So we're going to go back to Doji 1. Now, this is free on Thinkorswim. There are a lot of places that try to charge you really a lot. So here's Doji 1. So you got this. You got the close is less than that. Now you want the MACD over 0. So add a filter. Study. There. Now you have where this is overbought. Now that overbought can stay overbought, but then you're looking for reversal patterns. So now you have 8 under the in a downtrend, theoretically, overbought with a doji. That's pretty cool. So let me share this with you that we just did it right here. So let me save it. Yeah, I'm going to do it now. I got to save it first. So doji scan Adam. We'll call it Adam because you asked. So I'm delivering. There. So we'll scan. I don't know. See, they're not many because we've been in an uptrend. So then I'm going to share that. So, Neil, I hope this answers your question of combining all those things. There. Yeah, you could do the same, just reverse it, but I don't know if I have enough time for that. But yeah, in this uptrend, you got to have that. So there's that. Let me share it in here. And let me share it in the YouTube. I really like doing these. Now, there's a different thing in here that you got to respect. Well, not respect, you got to change. If you're doing this before the opening, it's not, it'll show no matches because it'll say volume 0. After the close, it's fine. But if you do that, you got to make this average volume. Average volume. That's what you have to do. So now when you have it, you have all of these stocks. So if I see those overbought in a downtrend on a daily chart, that doesn't mean to short them. It means to look for the reversal candle. So let's save it as 8. And let's look. So now we go into charts. I made the charts too big. I can't fit it on the screen. Sorry about that. All right. Now we make it 8. So you got all of 8. So let's try. There you go. There's a perfect example for you. So UNH has been a monster for a long time, all of April. But look what's going on now. It's overbought with all these dojis. That does not mean to short it. Now it means to go to a 1 hour and wait for your trigger. So I usually look for a discernible chart pattern. Right now, I'm not sure, but probably that. The bigger one would probably be that. But at least there's one that pops up. How about Celanese? There's another one. A reversal candle yesterday, just, sort of a red candle. I like big red candles too. And then the doji and overbought. Why am I touching it? Because I think they have earnings after the close. Ideally, though, I'd be all over that, shorting it if it didn't have earnings. And what would I watch? I'd be watching that trend line. If it broke that trend line, then it's overbought with a doji under the ATR trailing stop with a discernible bearish pattern. So I like to have 3 reasons. So I hope that helps. So on Neil, real quick, but that's the example. Now you might say, why are you showing those? Why aren't you showing bullish ones? It's a great question. I just did that one first. So if you do this, I have to change. I actually have to change all these. It's not that easy, but I'll show you real quick because I think everybody wants this. So I like when it's a big hit. So I'm going to take all stuff, all optionable. So now what we're going to do is the opposite. So just keep that in mind. We want all stocks, all optionable. So we'll go to the original doji scan. And then what I'm going to do is go to some of my other scans. I got to copy and paste it, unfortunately. So I'll just take under an ATR trailing stop. So what you want, over the ATR trailing stop, sorry. There. In fact, this will work for you. I'm just going to copy and paste this. So I'm taking over. So it's in an uptrend. That's what you wanted, right, Neil? So on our chart patterns mastery, one of our loyal subscribers is asking about these scans, and that's great because these really help. So now what we're going to do is go back to our doji that only has these two. And then I'm going to add this. And it only has these factors so far. So we don't want that. We want it over it. So you want it where so thanks to Eric on Simpler to teach me how to do this. So now you got the close is greater than and equal to. But now you want the ones oversold in an uptrend. So first I got to save this as Doji Scan 111. I got to remember this. We're just building steps here. That's all we're doing. So now what we're doing is I got to go and do the other one for you. You want it oversold in an uptrend. So I'll go into here and take the MACD. So you want it less. So I'm doing this in the bottom of just copying and pasting code. So now we're going to go back to Doji Scan 111. Real original. And now we're going to add another study. And we're going to have this. There. So now you got exactly what you were asking for. 30 to 200, 700,000, doji. The close is greater, so it's in an uptrend, but the MACD is less than. So then you're looking for a doji, reversal pattern the other way. Let me save that for you. And then I think I have to get going, but there. So scan, share that for you. Now, if I mess this up, I'll let you know. Close is greater than MACD, yeah. So I'm going to share this. There. So there's Doji Bull Scan. Let me go put that on YouTube. I like doing this. It just takes research to do it, but it sure is better than paying $400 a month for some person on internet on something that's on Thinkorswim. So, this is just a doji scan. And I'm telling you, there's one on Market Chameleon, but I don't feel like paying what they have. And then FinViz Premium, they have it. So I just can't do that to you. So let me put this in here. And let me put that on the YouTube side. I know I went off a little too far. There. So there's a bull scan and a bear scan. So I hope you've enjoyed that. I'll try to stay in the free room. I don't know.